Hey folks, Simon here with your Tao Daily for Friday the 17th of January 2025. Very happy Friday to you. Let's wind the clock back to the 14th of January. I put out this tweet on the 14th of Jan just highlighting this chart. We'd had a nice rally off the lows here, and I just highlighted that SPY, which is the ETF that tracks the S&P 500 index, was at the lower end of its trend channel. It had just closed the post-election gap here on the 5th of November, and it had also met a Fibonacci extension target. And the tweet I put out was, all systems go for a rally here, but unless things change, it's a rally within the context of a downtrend. So let's see how things played out. So here was the bottom of the trend, and lo and behold, we've rallied, and we're now back at the top of this trend channel. We're also snuggled just underneath the 50-day simple moving average, coincidentally or not. So what this means is the S&P has got some important decisions ahead of it, i.e., do we break out and maybe potentially rocket to new all-time highs, or will this downtrend line be respected and we continue our way back down to the bottom of the channel again? Time will tell, but one small positive I'd highlight is that even though the indices were a little bit weaker on Thursday, S&P finished down about 0.2%, breadth was positive. All right, we had nearly 3 times as many stocks rise as fall. Weakness is really concentrated in big cap tech, the Mag 7 stocks. Now, Friday today is options expiration, and we're ahead of a 3-day long weekend. Monday, the market is closed for Martin Luther King Day, which is also Trump's inauguration day. So the market may not show its hand today with all of that directly in front of us, but I think early next week, the direction, i.e. breakout or rollover, is going to be really, really important. If the market's going to rally, we're probably going to need to see the dollar continue to weaken a little bit. The dollar has just been on a tear here. I think this is going to be a high that could last for more than a week or two, and we could see the dollar continue to slide back down. All right, so that would be helpful. I also think if bonds started to rally here and yields fell a bit further, that would be helpful. And it's looking as though the bond market, I'm using TLT ETF as a proxy here, showing some signs of a bottom. All right, whether this is a short-term bottom or a long-term bottom again remains to be seen. But rising yields is generally helpful for the dollar. It's generally not that helpful for stocks, but yields have eased back since then. Scott Bessent yesterday seemed to pretty much cruise through his confirmation hearing for the role of US Treasury Secretary, and I think if he gets confirmed, the bond market would take some comfort from that. That's what I got for you today, folks. I hope it helps. Enjoy your long weekend, and I'll catch you next week.